The fourth quarter numbers, the dollar revenues and margins beat street expectations. Our colleague Rukmini Rao in Bangalore caught up with the management. She began by asking them if there is room for a change in their forex policy, what other factors dragged down in the quarter in certain parameters.
The largest impact for the quarter was actually the forex, like you pointed out. Otherwise, it's been an extremely satisfying quarter. We beat our own expectations in the beginning of the quarter. What I was particularly happy also is the turnaround in both Bluefin and Magnet. Both of them, were areas which were causes for concern that we highlighted to your viewers some time back. With Bluefin at 11% growth, Magnet at a 4.8% growth. So overall, it's been a very positive performance for the quarter. On forex, the issue was outside our control because the rupee appreciated very sharply in the last few days of March. So debtors that were historically recognized, maybe December, January, February, all had to be restated on 31st March with the new rate. It was purely because of a sudden sharp appreciation. So changing in the forex policy will anyway not help this either. So even if I had hedged more or hedged less or done anything else, it still wouldn't have helped us with the debtors restatement. So we are not planning any change to our hedging policy based on this.
Sure. Jagan, also if you can give us an overview in terms of your utilization is marginally up, but is there more room to improve as far as utilization goes? And also in terms of expanding your own margins, what is it that you'll be looking at in terms of levers to improve profitability really going into next year?
Okay, I will take the second question first. The factors, levers that are available for our margin improvement, of course, utilization is the number one factor. Yes, there is a scope for improvement of utilization from the current level. But what we should consider is our definition of utilization is one of the most rigid or tighter one. So, considering our scale, we need to manage the utilization and have some amount of bench for taking up the new projects also. So it will be some between 73 to 74% of utilization is the ideal utilization for the company. And taking the levers, the other levers, on-site offshore mix is an important lever for us. We are working on that, and we are also trying to get the operational improvement which is going to improve our gross margin level at each project. We have actually implemented a lot of new initiatives like Lean, which is going to keep improving the margin for us on a continuous basis. This is actually going to help us improve the EBITDA in the coming year.
So just to add one more thing to it, improvement in margins at both Bluefin and Magnet will also be one strong margin lever for us. Already in this quarter you saw that with the revenue growth, Bluefin came back to profitability. So a little bit more push on the same dimension will bring Magnet also into profitability. So improving the profitability in our acquired entities is also one of the levers for margin improvement at a Mindtree level.
Sure. Rostow, is retail CPG as a vertical going to be still a challenge, a pain point going into next year as well?
Not really. I think there are some one-off cases in this quarter. For the full year, retail CPG and manufacturing did have decently good growth. Based on what we are seeing right now, I think it's an overall portfolio. Some customers in a little bit of trouble, some new customers which we have won, which we are ramping up fairly well. You will remember last quarter we announced the largest digital deal in the history of Mindtree, helping a CPG company completely transform their customer connect initiatives there. So since some of these initiatives are more prevalent in consumer-facing businesses like retail, so you expect that to come back into growth mode fairly quickly. Not anticipating any major challenges on the retail CPG manufacturing vertical right now.
Sure. Also, if you can give us a sense of the deal pipeline and also in terms of really outlook geographically for FY18.
I think the deal pipeline continues to be extremely strong. If you look at Q3, we announced deal wins of $300+ million. If you look at the Q4, we announced deal wins of $200+ million. So whether it is large deals or renewals or digital, on any dimension, the pipeline is very, very strong, which is one of the reasons why we are so confident of our outlook for next year, that will definitely grow low double digits. So Mindtree will likely to be amongst the highest growing companies even into FY18.